Alright guys, you're welcome to our class for today. Um, this is Rich Effects Mentorship Group, and today we'll be actually focusing on market structure. We'll be discussing a lot about market structure here. We're talking about market structure, we'll be talking about trends, we'll be talking about support and resistance, and we'll also go further to the advanced market structure. So just a minute, just want to fix up something. Okay. All right. So now, basically, you might have been hearing about market structure. Market structure. What is market structure? It's simply the structure of the market, the way the market moves. That is what market structure is. The way the market is moving at a particular time. Okay, so that is just what market structure is. Now, under the market structure, we have what we call the trend lines, the trends. Now, the market structure can be classified into different categories like trends. Now, under these trends, we basically have a few things that comprises of these trends. Now, what are they? We have under these trends, we have the uptrend. We have uptrend. We have downtrend. And we have the ranging trend. Ranging markets is not necessarily a trend, but it's a ranging market. Or they call it sideways market. Yeah, sideways market. So I'll be explaining all of these things to you guys, and I believe you all have a clear understanding of what all these things mean. Okay. Now, when we talk about, we'll be going into practicals here. Now, when we talk about market structure, it simply comprises of this: the way the market is moving at a particular point in time. That is what market structure is. Now, under the market structures, we have different types of structures, which is the uptrend, downtrend, and the ranging market. Now, to fully understand what this is, I'll be giving you an example of this. Now, the first is, we're picking from here is the uptrend. Yes, we're picking the uptrend from here. Okay. Now, the uptrend, how does the uptrend market looks like? I know you must have been staring at a chart. You might not really understand how these things look like. Okay, I'll be explaining it to you today. Sorry about that. Okay, so the uptrend market, this is how it looks like. Okay, this is basically where the market is constantly making different breaking different highs and lows, moving upwards. So this type of market, this here is called an uptrend. This move here, where the market is making a higher high, a higher low, moving upward, moving down, moving upward, moving downward, and so on and so forth. This is what the uptrend. This is uptrend. This means uptrend. So it basically means Yes, the market structure at this point is what? The uptrend market. This is what it means. And the same thing goes for a downtrend. That is just what you need to understand about the uptrend. Now, about the downtrend too, the same thing goes for it. Yes, downtrend. Okay, something goes on now, but it's actually the opposite. Now, for the downtrend market, you can see that the market is repeatedly making higher highs and higher lows, moving up, moving down, moving up, moving down. But overall, it is doing what? Going downwards. So this is an example of what the downtrend market. This is how the market is moving when we say downtrend. When we are talking about downtrend, it means that the market is going what? Lower. Okay? And when we are talking about uptrend, it means the market has been making up movements, has been moving upwards. Now, how about the sideways market or the ranging market? As the name implies, you could actually understand that it just means that the market is not actually moving upwards, it's not moving downwards. So what would the market be doing at that time? Let me just write this down, ranging market. Don't worry, we'll be going to the chart so you all would have a full understanding of what we are talking about here. Now, what would the market be doing if it is not going upward, if it's not going downwards? If it's not an uptrend, if it's not a downtrend, what would the market be doing? So basically, at that point, the market will just be moving up, down with no specific direction. Up, down, up, down, up, down, with no specific direction. Okay? So I believe this is all understood. Yeah. And I believe while we'll be going to the chart, you can easily identify the uptrend market, the downtrend market, and also what? A ranging market. Now, let's give an example of how this works. You could actually see a market probably moving like this, making significant highs and lows, and all of a sudden you start seeing something like this. You can identify these three market structures in just one particular currency pair. And then you could also see something like this. Yeah, you can identify them in just one currency pair. You can identify them happening. Yeah. So now, I believe looking at this, let's use this as a chart representation of the candlesticks we have. And let's try to see how we can figure out uptrend, downtrend, ranging market here. The examples are here. It is clear. I mean, you can literally see them here. So we could say because the market is actually moving upwards, yeah? It's what? This area can be classified as a uptrend, right? Yeah. It can be classified as an uptrend market. So I'm just trying to this here can be classified as an uptrend market. And what about downtrend? Now, if you look at this, you can see that the market is doing what? At this point, it's going up, going down, going down. So we can say at this point that we are what? On a downtrend market. Yeah. So this one is what? The downtrend. Okay. Downtrend. Right. So after this happens, we can see what significant. Just the market is at this point not making higher highs and higher lows. It's just doing what? Moving sideways. So we can call this here a what? A sideways market. We can call this a sideways or a ranging market. I prefer using ranging market because it's just ranging with no specific direction. And then you can see the market does a different thing here, which is, if you know what that is, switches to what? Uptrend. Basically, these are just the three phases of the market. This is what the market does. Okay, when you go to your chart, this is just what price will always do. So you always see market move. You always see the market move in an uptrend like this, here as indicated here, and then a downtrend, then ranges, uptrend. This circle repeats itself over and over and over again. This circle repeats over and over again. We can call them the three phases of market structure: uptrend, downtrend, ranging, and that's all. That is what the market actually does all the time. Okay, so with this you can actually understand the charts properly. When you see the candlesticks, you can know that, okay, probably this market is ranging, going upwards or going downwards, or it's just making movement. So let's go to chart examples. Okay, let's go to chart examples, and later on we'll come back to the next part, which is support and resistance. But let's go to chart examples. Let's see what we have. Okay. Okay. So, what do we have here? Yes. What do we have here? Good. We have an example of these things that I just mentioned. Now we can see here that the market has been making what significant highs and lows. It has been just been going upwards and like that. So what can we call this side of the market? What can we call here? It is what? An uptrend market, right? Good. And what can we call this one where the market has been making higher lows? It has not been making highs again. It's not going downwards. We can call this what? Can call these what? A downtrend, right? Correct. And what about a ranging market? Remember we said that the three phases or the three market structures we can always find that are basic is just this. Now, the ranging market will always occur, but it is not as often as the uptrends and the downtrends. Now, we can look at here, this zone, this area here. We can see the ranging market, isn't it? Definitely. We can see that the market has been making up, going down without any specific direction before making this move to the upside and then continuing and so on and so forth. But we want to focus more here because the market has just been doing what? Ranging at this point. So this is an example of a ranging market as indicated in this chart here. This is what it means when we talk about a ranging market here. So now, how do you actually know that at some point in time the market wants to start going upwards or going downwards, or actually will be ranging for some time? This has been a lot of challenges for a lot of traders, and because of they find it difficult to identify when the market will actually be going upwards or going downwards, or actually will be ranging for a period of time, you actually hinders their growth and they end up losing a lot of money to the financial market. This here will be actually explained clearly to you all, and to help you understand this is where the support and resistance come in. All right, this is where support and resistance come in to play. Now, what is support and resistance? We'll be explaining that to you guys. I'll be explaining that to you guys so you have a clear understanding of what it is, support and resistance. Okay, support and let's talk about support first. So, of course, I believe you know that the word support, what it means. It actually means to do what? Support something or hold something firm, assist something in making it more firm or more stronger, as the case may be. All right, good. That is what support means. Now, when it comes to trading, support means a level in which price has visited, okay, and about 2 to 3 times, and that level is seen as support because it is strong enough to hold off market from breaking lower. So supports are often represented by horizontal lines, and which means that the market has probably come around a certain level, comes back to that level again, but this time it doesn't break below that level, but instead it goes up. That zone can be marked as a support. Okay, that zone can be marked as a support, and that is where we use a horizontal line to indicate this. So horizontal or vertical line. A horizontal line or a line to indicate that this is what a support. Okay, so a support can be valid when price comes to a certain level. Once it gets to that level, it bounces off from that particular level. Now coming back again, it respects that same level and bounces up, and probably comes back a third time and bounces up. That level can be seen as what? A support level. So what you do is that once you notice that, okay, price has moved to a certain level, comes up, goes to that same level, and did not break below the low of that level, but instead it does what? Instead, it bounces off, comes back, and we can say that that is what? A support level. And you can easily just draw your horizontal line at that point. So you use a line, a trend line, to draw that. Yeah, it's a horizontal line. So you use that to draw it down here. And there you have it, your support. Okay, so it is as simple as that. So we actually know that the support is valid when the market bounces off a particular zone twice. Okay, once it bounces up there the first time, the second time, then you know that, oh, that particular zone is a valid support level, and you could know that, okay, once the market comes back to this level again, I'm definitely going to buy, or I'm going to, of course, you should be buying at support. So once the market comes back to that point, you are expecting the price to do what? Go up. Okay, so you're expecting price to go up, which means that you'll be in profit. Once the market comes down, you buy and it goes up. So there are traders who basically just trade support levels. Okay, so they just wait for the market to make a certain move upwards, and once they notice that there is a support, they wait for the market to price to go up and then come down to their support level and they buy. So that is it for the support. And how about resistance? Resistance is simply the opposite of support. Resistance is simply the opposite of support. Okay, just trying to make it easy for all. Resistance, okay, yeah, is the opposite of support. So when we're talking about resistance, it means that there is a certain level the price gets to, but fails to break above that level, and that level is seen as what? A resistance. So let's do it again, guys. Let's do it again. So let's say that market is at this price level and does what? Makes a move to that same level again, but this time it doesn't break above it like this, but instead it rejects, rebounces from that level. That level where it rebounces can be seen as what? The level here where it rebounds can be seen as a support, and you can actually draw your horizontal line to indicate that, okay, this is a support level, and then you wait. Once the market comes back to that level again, it is definitely going to do what? Sell off. And then you do what? You can place a sell for that particular pair. So there are traders who trade support and resistance. They just wait to identify supports, then they wait for buys, and then identify resistance, and they wait for what? For sells. It is as simple as that. Okay. Now let's go to chart examples. Let's see chart examples that will actually help you understand this. Okay. Good. So let me just clear some of these things up. Now, remember in trading, it's the prices might not actually, the lines might not actually be the same, but once it has been indicated as being a support, once you've seen price visit a certain zone twice, then you should believe that it is what? A support level, and it can hold. It is definitely going to hold. So we can see an example here. Example of what I just showed you guys. Yeah. So this level here, you can see this level. Price does what? It goes up, comes down, still in that same level. It does what? Bounces off. So we believe that yes, since the price has bounced off this level, definitely if it's coming back, it should be our very good level of what? Of support. Now what do? Is either you use your trend line or your horizontal line, this, and map your support level, or you use a rectangle here to mark this zone, because it is often a zone. Yes, it's often a zone, not just a level. It is a zone. It might not be the exact price, but it is a zone where market tends to do what? Reject quite often. So once you see this first move, market comes, bounces off this level and goes off, what should you be thinking of? Okay, once it comes back here, I'm definitely going to do what? I'm definitely going to buy. So you actually place your trades, buy, and boom, we see what happens. Yeah, the market does what? Comes back and moves away from there. Okay, let's have another example so you all would understand more. Another example on support. Let's okay, we can also see here, so it's definitely everywhere. You can also see here a support level as well. Yeah. Now what do we see here? The market creates rejection from a level here, comes back into that level, did not break below that level, but does what? Bounces off, and then you can see that it comes back again into that level, and what happens? It moves up. And what should you be doing? Obviously, you know the answer. You should be buying at that level. Yeah, good. You should be buying at that level. Let's keep looking for more. We'll also be going to check on resistance. Okay, there is definitely a lot. Okay, we can also see that here. You can also see this level here as being what? A support. Okay, the first level was broken, so it's not a support level. It's not a support level. It has been broken. Okay, let's just switch over to resistance. Yeah, remember we said resistance is also a zone where the market tends to bounce off once it gets to that zone. Now, where is a resistance level? How do we identify resistance level? Fine, resistance level is the last point. Let's say from here, we can see a resistance level here. Good. Okay. No, that's not the resistance level. Let's, I think we don't have much of a resistance level on this particular pair, obviously because it has been in an uptrend. So when market is significantly making upper movements like we can see here, there probably will not be a resistance. You cannot see a resistance above. Okay, so where is resistance? Let's look for a different pair that we believe will be having such. Okay, let's check on GBP USD. Okay, okay, let's just stick with that Euro USD, but we'll go to lower time frames so we can actually get what we want. Okay, so we can get what we want on lower time frames. We can see resistance level there, I believe. Okay. This market has been making significant highs and lows. Okay. I think we've spotted an example here. Good. This here is a resistance level. Yes, it is. You can see market after rejecting comes here and then does what? So the third one is a sell signal. So you can see here that we can then begin to sell once the market gets to the next zone. For your resistance zone, you begin to sell. You can see the sell happening, and let's also look for another one. Let's look for another example. Okay. This market has been. Oh. Well. We might not be having much of an example here, but I believe you understand what we'll talk about. You can go to your charts, your leisure time, and try to backtest these things. You see resistance and support levels that are indicated. Okay, you see those things, and I believe you will be able to understand what we've been talking about. Okay. So that's it for market structure, trend, support, and resistance. Yeah. So I believe you understand. We'll be hanging up here. And, don't forget to like, subscribe, and follow us. That's all we can take for the class. Next week Monday we'll be resuming with the advanced market structure. We'll be putting all these things together. We'll be able to understand why we need to buy and why we necessarily need to sell. Yeah. So that is all we can take. I believe you all understood what we have been talking about.